bushwhacker dance doesn't go with that new beat, so that's why I don't do it anymore. But I do like the intro for Tim. There he is.
Hey guys, good to see you.
Where are you? That you're hiding.
Yeah, come on, you're hiding it.
I know where he is.
I see these awesome mountains in the background.
It appears like I'm in some like opium den, doesn't it? Looks like it.
You're in the 70s at least, Tim.
You're back in the 70s for sure.
Back to the future. We went back to the
70s.
past.
I love the 70s.
It could be another thing too back there. But Tim, are you still in Texas?
Yeah. I'm at our home.
That's that
away
good
from
old
home.
Texas background.
Yeah, it's the Sheraton in Georgetown, Texas, and so it's actually it's a decent day. But if I open those curtains, then I'm backlit, and it looks like I'm in the witness protection program. So I had to take the lesser of two evils. Anyway, yeah, we're in Texas.
Real quick, Tim, great restaurant recommendations in Denver. I had a really good time. That REI store, I mean, yeah. I could have spent like 10 grand in there. That thing is like 250,000 square feet. But anyways, Tim, we got you here. Big rally. Is it possible for us to rally into the year from this elevated level? Can we rally all the way to the end of the year?
Well, I'm sorry I missed you in Denver, Joel. I'm sorry that I wasn't trooping you around to some of our favorite spots there. But next time, I'm glad that.
Okay.
So Rioja is the restaurant that I think you went to for lunch, which is a great Jennifer Jasinski restaurant in Denver, and there's a lot of fine dining in Denver. And that REI store is awesome. So Joel, the it's not how I think about it. I realize that it's all the talk now is, well, can we have that now that the market has appeared to have recovered from a bottom? Do we have this big rally into year end? And I think traders, it's not the way that one should think about it. Dennis, you talked about this last Monday that we think in short term increments, and we take what the market gives. And I have two thoughts about this. I'll be surprised if that happens, and I'll tell you why in these two reasons. But I think first about what's coming right ahead of us. So there are options expirations this week from a sentiment standpoint, which is to me a market structure, not technical term. From a market structure perspective, we are at a level that has always preceded declines. I think that these massive short-term rallies create real problems for sustained gains, and it's because so much of the money is pegged to models. So if the whole market declines 10% and it recovers half of that or more in 2 or 3 days, believe it or not, all the models will be out of whack. People will be overweight things, and they'll have to sell it, and we haven't even remotely gotten back to levels where we should be. And that problem arises if the amount of money coming into the market is not greater than the amount of money leaving it. The resets, the gains will be short term, and the resets will be lower. And I don't think that we have broken that cycle yet. So Joel, I would not think that way as a trader. I think about, are we long or are we short, and in which things? That's the way I think about it. And to me, the end of the year is a long way off. I'm much more concerned about what's coming this week. Is that a cop-out answer? That's how I feel about it, though.
What do you think is coming this week? I mean, we have a lot of things at the end of the week, to your point, options expiration, but to a bigger point, a potential government shutdown looming over in this market as well. I mean, we know fundamentals do play a part here in markets. We can look at technicals, but there's a lot of other pieces of to look at as well. What do you think is happening this week, and what's your data showing?
Well, I'll just show you, because this is what I do every time I look at the market. It's going to be what did the data indicate? What is broad sentiment? I think about broad sentiment, the context, and divergences. Those are the things that shape how I approach it. Doesn't mean it's right, but on the other hand, I'm outperforming the market. These data do consistently work, and I wouldn't talk about them if I didn't think that there was merit to it. So here's what I see, Dennis. I look at broad sentiment, and if you look, I'll zoom this in a little bit. So I always think when we've reached the red line, you should be cautious. It's See back here, September, right into September option expirations, the green part of the graph. It got to the red line. That's when I shifted short. But actually, right here, I shifted short, right into options expiration.
Tim, can we just stop you for a second, share, because I'm not seeing it on the screen here yet.
Okay.
Here we go. Now we're good. Now we're good.
We have the Sheraton delay at work.
Look at the puns today.
Oh,
we
yeah,
are full of them.
The Sheraton
Yeah,
delay.
yeah,
right off where
Sheraton,
we
Tim.
were going.
They said opium den. That does looks like
Told
a
you, Hilton,
looks
man.
like a
It's all
massage
about the
parlor.
Hiltons.
Looks like a
That's right.
massage parlor to me. Not that I've been in one, but
Could be
anyways.
that- could be that
Delay, I
too.
love that.
So here's what I was pointing out. Just the green part of the graph. So this is the S&P 500 SPY. It's a proxy for it. And so I'm always watching this. You know, when the green part of the graph is rising, I tend to be long. I pay a lot of attention to the supply side. I realize you can't fully see it here, but the market always declines from these levels. Happened here too. It was actually ahead of it because derivatives played such a role here in October. And now where are we? We are at 6.6, well above the red line. So now if the Sheraton keeps up, I'll scroll down and show you the supply side. So this was the principal reason why the market rose dramatically. We had index futures expire. The banks had to make indexes whole. The market was down 10%. Goldman Sachs has to provide a bunch of stocks to let's call it BlackRock, Vanguard, Fidelity, State Street. And so then they're offsetting that by being short the market. They cover all of that. The market soars. And where are we now? Supply is rising. Demand is peaked. I look at that and say, that's not good into options expirations. Most of the time, that means trouble into expirations. Now, it may not happen, but that to me is what lies immediately ahead for us as traders. And we don't want to give back all these great gains that we've had a chance to build in the last week. So I would begin to think about going short. Not yet, but close to it.
Okay, Tim. Also, we have a CPI on Tuesday and PPI on Wednesday. So we're all rah about the bond rally and everything.
Right.
It's we got to be we got that. Now
And the
I
recent
love
bond rally has waned here, and
I
that
know.
is maybe waiting on that data to see, hey,
Yep.
do we continue the party or not? Sometimes charts wait for data, and I think that's what we're seeing in the TLT here. It's a wait game to see what's this CPI number look like.
Right.
Yep. Getting a little bit too optimistic. Now, Tim, I know we bring in sports to the show and doesn't always get the greatest reception, but and Dennis Jimbo Fisher, this dude, man, I wish I had his agent because he's walking away with about 85 million. He got fired from Texas A&M, and you went to the Texas A&M game, right? Texas A&M, Mississippi State, and they won 51-10. Michigan won too. But he's getting firing. So what does Jimbo Fisher's firing teach us about trading?
Well, the short answer is results matter, right? I mean, the great lesson out of Jimbo Fisher and for traders is results matter. While A&M, my wife's an Aggie, and the associate athletic director, he's the head of what's called 12th Man Productions, which is you cannot believe the amount of production, TV, video, social media, everything that's occurring at these D1 schools for recruiting purposes. And A&M has one of the great video production capability. I have 4 major studios. He's got 50 employees, 150 student employees. And so they produce a lot of stuff. So that he's the guy that got us tickets and took us down on the field and all this kind of stuff. But it's funny. We were sitting and talking Friday night at dinner about what he said. If we fire Jimbo Fisher, it costs us $75 million. So we're watching the game. It was a disastrous start. Mississippi State returns the opening kickoff after all the pyrotechnics and music and 105,000 people in the stands. And Mississippi State returns the opening kickoff for a touchdown. And there were a lot of questionable calls. So by the third quarter, we started passing a hat around the stadium, and we came up with $75 million, and we said, let's fire him. That's really what happened, because there's a lot of money at A&M. You cannot believe the amount of money. But the lesson, I'm joking about a lot of that, and it's a significant issue for a public university to hand out that kind of money. I've long joked that the greatest gig in the world is getting fired from a D1 head coaching
I know.
job.
I should have been a football coach.
Yeah, and maybe traders, we chose the wrong thing. That we should have all tried to become D1 football coaches so we could get fired and get rich. But yeah, really, the serious note is results matter, discipline matters, and as heralded as he was coming in, he has not delivered the goods.
So here we are. We got for another 2 minutes here, Tim. And I mean, again, this market, it gives mixed signals to a certain extent. A week and a half ago, it looks like we're falling off a cliff, and then we get this violent rally that some people are expecting, but a lot of people it caught off guard here. What do you think now? I mean, and we have the separation too, where the Qs are outperforming. Again, the same story. Values underperforming here. Is it more of the same for the next week here or 2 weeks ahead? What are your thoughts?
Well, I think you and I, Dennis, were on very similar pages. I saw a couple of tweets that you put out last week about trading the ranges, 50% retracement, trade the range, and I think about trading volatility only where the supply and demand are strong. So last week I said I'm trading big tech. So the big tech stocks. This is the portfolio. So you go back a week, we had rising demand, insufficient supply. Now demand is peaked and supply is rising. Am I going to continue to pursue that trade? Well, there's still a little day or two of opportunity, but no. And I said I would go. I would go leveraged long the market, and that trade worked too. And the reason was because you back up to last Monday, whatever that day was it the 6th, I think. So you could say, well, demand's rising, supply is falling. I'm going to trade that. Now that has fully run its course. If you looked at momentum, there were like 2 stocks in the momentum portfolio. It got up to 18. Now it's falling.
13.
It's at
what's
13.
in there? What's in there?
So there are several good stocks in here to me, like Square, PayPal, AppLovin. What's this stock?
Unity made it in there now.
Unity made it in there, and you say, well, how can that be? Well, it's all about supply and demand. It doesn't matter what the news is. It doesn't matter how many reasons something might be bad that you could come up with. Look at the supply and demand. If the supply and demand are diverging, there is a short term, I emphasize those words, opportunity. I trade 1 to 5 days. Most of the time it's 1 to 2 to 3, because statistically in these situations, there's more than a 70% chance of producing 2% or more when these conditions exist. And what I mean by these conditions are a 10 with insufficient supply. You say, well, the trend's up. That's a 30-day trend. I'm going to look at the shorter term, 1 to 5 days. What's the trend? I'll show you an example. I mean, Square is a great example of the kind of supply-demand divergence that Edge is designed to show us. Look at this. See how these things are diverging? Strong demand, falling supply. That will almost always produce in 1 to 3 days at least 2%. And you say, well, that's not very interesting. Repeat that over and over, and you're wealthy. It is vastly superior to almost anything else you can do. And so that's why I use that. I look at that's a great example of what you're after with Edge, but realize it's short term. That could change at any moment. The moment this begins to decline and that reverses course, you're out and you move on to something else. And I think the whole broad market could shift short within the next 5 days. I'm not saying it's going to happen. I'm just saying the data have that set up, and the data are almost always right.
We've been on the line.
You're telling me that stock actually was Lee in there and not you. You can tell I'm going blind. There you go. Scroll down.
I was like, yo, where was Unity?
Let's see.
The other way?
Which one was it?
Really?
Oh,
I was like, where was Unity?
Oh, Dennis. Oh,
man, that
man.
looks like a U to me.
Yeah.
Holy.
I'll teach you how to make it full screen there, Dennis. Don't worry.
Oh my gosh. It is LI. No wonder I'm like, I'm trading the wrong stocks. I can't see the tickers.
Yeah, just like you thought Wix was a Chinese stock.
Well, that was just a mistake, but that's just a vision thing there.
Well, if you want to keep up with this stuff,
here's a tip for you. Stay young.
That's right. Stay young. That's the best advice we could give.
And maybe get the platform so you can actually see the stock, right? That might help you.
That'll help. That'll help.
You got to get those new prescriptions, I guess.
All right, guys. Like always, Tim Quast, of course, Market Structure Edge. You guys can get your free trial all the way up to a month. And like always, check it out, guys. Give Tim Quast a follow. It's always good to have you, Tim. Be careful out there in Texas.
Will do. Good to see you guys.
All right. Take care, Tim. All right. Let's